The handover from the globe is very strong, though that was the case on Friday as well, when we did make it to that all-time high, and then from there came tumbling down. But this morning, some stability is what we can see on the screen, about over 100 point on the Nifty implied open.
Okay, now the sell-off on Friday, was it crucial? Was it because of this buzz that there could be a change in the tax structure, or was it pure technical FI selling? I guess it was a combination of both. FI sold out, markets were due for a correction, and what added fuel to, and what really fueled the selling sentiment in a sense was this tax buzz. The finance minister, let's look at the tweet. She tweeted on Friday itself, post-market hour, the tweet came, and the immediate reaction was that SGX started trading higher. It traded higher on Friday, and then looks like we are in for a gap up start. So first, if I address the root cause on Friday was FI selling and the tax change of tax regime buzz. One of the root concerns have been addressed. FI selling, very difficult to fathom what they would do, but if they sold because of the fear of the tax regime, then that would be nullified. Now, what are we starting with this Monday morning? Well, we are starting with decent set of global cues. We are starting with SGX, which is indicating that we are in for a gap up start. We are starting with good numbers which have come out over the weekend. There is more result. There are more result upgrades rather than downgrades, and we are starting a crucial week where about 10% of the Nifty 50 companies are due. But more importantly, it's the next phase of the general election, which in a sense now will soon start occupying the center stage. So what happened on Friday second half, hopefully I expect that some repair and some bounce should be there at least in the first half of this first half of the trade today.
Oh, yes, indeed. And there's a lot as well to keep us fairly busy. But the other talking point then that we want to touch upon is the Berkshire Hathaway annual shareholder meeting. Remember, this was the first one without the longtime friend and partner, Charlie Munger, who passed away last year. And a lot of key takeaways. We'll just touch upon a few, talking about trimming stake in Apple by 13%, but still saying that Apple may remain the largest position. And in terms of earnings, over $100 million is what Berkshire earns per day. They also touched upon how insurance is a very strong business and saying never bet against America.
$100 million a day is what Berkshire Hathaway earns. And
how many zeros? I'm wondering.
And convert that into Indian currency.
Yeah.
And look, they're sitting on $200 billion of cash. $200 billion perhaps is the market cap of the top 3 companies in India. So that's the size of, cash kitty what Berkshire Hathaway is sitting on. So, well, in terms of the specific new communication, well, they've trimmed their exposure to Apple by 13%, and that's a very sizable kind of a commitment which is coming in, which is sizable amount of reduction which has come in. While they maintained, or Warren Buffett has maintained that Apple is their top holding and it will remain their top holding for the longest period of time. I think this is pure risk management which clearly is at play. The specific comment on AI, which is that even the Buffett has said that he's not someone who understands AI the way world does, but he has in a sense raised a red flag where he's specifically mentioned that AI in a sense is something which you really need to watch out, because this is something which really could have a lot of issues going forward in terms of how you judge it. And then a very specific comment on India when being asked, and he said, look, I'm reaching that stage in life, and for Berkshire Hathaway, now large part of asset allocation would be done by the new money managers, and I don't have the energy to really do that. I'm not the one to do that. So Berkshire Hathaway is open to investing in India. They've invested in India, we know that, Paytm, and they sold out. But unlike China, unlike Japan, where Berkshire Hathaway has sizable presence and Buffett himself was involved, I guess one would argue and say that Berkshire Hathaway unfortunately does not have a very large, sizable, multi-billion-dollar presence in India. Directly, indirectly, you got some investments, but that's about it.
Yeah, absolutely. In fact, on AI, he's saying it's profound. That's what makes it a genie. He's saying AI is a genie that is already out of the bottle, similar to nuclear weapons. So he's pretty much warning here, saying that AI has enormous potential for good and enormous potential for harm as well. So Yeah, it's a bit of a catch-22 there. But just looking at the cues this week and, coming back to our markets, irrespective of that bump up, whether it happens or not, what was the reason, etc. or not, a lot of cues for our own markets to actually drive and push the markets forward. Like you were saying, decent earnings coming in. You've got 13% of the Nifty earnings this week itself. You're going to be stepping into a very crucial phase 3 of the elections as well, and 3 big IPOs too.
So earnings are largely autos. So it's actually the week for autos. There is Hero MotoCorp. I think there is Tata Motors. So Bharat Forge. So largely this is a week which is big for autos, and that's where I guess bulk of the attention would be on auto. Is been a performing sector. The weightages may not be that crucial, but the fact that this has been in performing sector, this is where a lot of excitement has been. This is where ranked outperformance has been. I guess this sector in a sense would be crucial from a market standpoint and the positioning standpoint. Then the second moving part is the next phase of assembly election. And as you go closer to the last phase, as you go closer to the counting date, more and more political narrative will start occupying the center stage. Phase 1, nobody spoke about it. Phase 2, acknowledgement started, there was acknowledged by the market. Phase 3 onwards, I think there now really would be chatter, there would be opinions, and that in a sense now will start impacting the market per se. I just want to point out one interesting thing ahead of the election, and just to point out that just before the first phase of polling, volatility in the market, which is India VIX, that had got crushed. It had got crushed to a multi-year low. But suddenly last 7 days or 8 days, the volatility has seen a spike of nearly 40%. Now nothing has changed globally, but volatility is making a comeback. And that in a sense is the indication of how markets and what markets are telling you, that how gradually as the election moves on, hedging starts, volatility meters, they will start increasing more and more. There you go. At the beginning of the election cycle, the volatility was at 10. Everyone thought that election has come and gone and no one bothered. But the spike in volatility, and 14.5% is not scary, but it's a number which just is an indication that from a market standpoint, there is going to be more and more chop and churn in the run-up to the election. So watch this space. As the election cycle rolls on more and more, I expect volatility to speak higher, to go higher. First phase of election, we spoke about it. Markets said, okay, they've acknowledged it. Second phase, markets acknowledged it. Now I think this will start occupying what could be called as the center of discussion as you go closer to the point of polling, as you go closer to the counting date now.
Yeah, perhaps the voter turnout turning out to be more important than the earnings. And yes, indeed, we do have a fairly healthy handover coming in from Wall Street. It was a flattish week, Nikunj, gone by. You had the PSBs maybe outperforming to a certain extent. This week we've got earnings. So how exactly should one be positioning themselves?
See, if the market sustains today in terms of a gap up start, and then markets in a sense get convinced that, okay, what we saw on Friday, second half of trade was more like a knee-jerk reaction. There was sentiment at play. There were not large force of FI selling, and that gets nullified. Then by the second half of the trade, I will not be surprised if markets really take a giant leap forward. Because small and mid-cap stocks are in a good groove, and the FOMO effect, I think, is just clearly visible. But after a gap up start, if you see sizable rundown, then markets would start saying that in the near term, okay, FIs are back, they are net sellers, they have been selling in the market, they have been pulling liquidity out, and then markets have picked out in the short term. So the first 2-3 hours of trade today in a sense would be crucial. I'm not saying that you are at any kind of a turning point, but purely because we are talking about today, tomorrow, I guess markets in a sense would be important from that prism to understand and to judge. If you sustain for first 1 hour, 2 hours, if you don't see any pent up selling, then there would be further bout of short covering, because one of the issues on this whole tax buzz, that has been clarified.
If you like this video, then like, share and subscribe to ET Now.